Good morning. This is Bruce with Targeted Wealth Creation. Let's jump here on GDX and GDXY. All right, what do we have? Let's go here to June. I got to start a July tab soon. All right, so we were flat 1889 from 1889. How did GDX do? Well, they went down 4 cents. They went down 0.12. We stayed flat. So we're the winner, chicken dinner. Okay, so here's something I wanted to run through quickly. Since I'm doing these individual videos, I got a little bit of time. So people often say, well, GDX, GDXY, Coney, Coin, Misty, MSTR, Tesla, these funds just simply underperform the underlying growth fund. And I always say, well, not necessarily. Well, what do you mean not necessarily? They have 100% of the downside and they have, up to only 15%, profit participation. I said entirely wrong, right? And then they've heard it from somebody who heard it from somebody that maybe knew options, right? So it just gets passed along without somebody challenging them. So oftentimes I say, well, it's just not true. So would you agree that they write a naked call and they collect income on that? Oh, yeah, but that's why they can't keep up with the underlying because they can only be up 15%. I said, well, yeah, but if it's 15%, they wrote the calls, they can get 15% every week if the underlying is going up 16% every week. So isn't that pretty close? But if that underlying runs up 50% in 2 weeks and we had a 10% call and a 11% call, yeah, we're going to underperform, right? But you're going to get a nice income out of it. So why I'm telling you that is I just wanted to show you a sheet here. And I took the time to start with a new fund and just track it every single day. And I'm also on Misty or Coney, I forgot which one, I'm going out and I'm calling it a beat column, and I'm giving the percentage gain continually to the winner, right? Whether it's up or down, whether it's the underlying or the YieldMax fund. And so I did it here in a slightly different way. I just said, okay, well, here's the first day of trading, 522. What did GDXY do? Well, they went down 3.79. How much did GDX, the underlying? Well, they went down 4.01. So I award the point on who goes down the least. In other words, they're outperforming a drop down. And when they go up, who goes up the most? So it's an either or. You can't go up and down in the same day. You only have one outcome. So there's always a point to be awarded. Here's a case of we went down 2.25 in GDXY. They went down 1.97, so they won that point. So I run that through my analysis, and I get down and I say, okay, we have 27 trading days established. And how are we doing? Well, GDXY is 115 of the 27 days. Now, like I said in one of the other funds, I can just come down here and I can sum this total up and sum the other total. The only thing that I don't allow for is when the dividend is taken out. I don't count that as a win or a loss, right? The ex-dividend date, because it's not really fair. You can come back and if you added all of your month together and then add that day and just track it by the month, that's fair because we did pay it out and you do lose that even though you get the money. But there's a better way to do total return. It's just calculate all your dividends over time and then compare your capital gain or loss, even though you may not have sold over that same period of time, add those two and that's your total return. And then you can compare that to the underlying stock, right? Let's say I got 50% dividend and I got 8% capital gain on paper. So I got a 58% gain. Well, maybe the underlying was 53 or 54. Just picking a random number. Then you can say, okay, well, with dividend and with capital growth, I outperform the underlying, right? Or you can just say, how's this fund doing altogether? You know, I got 90% return on my capital in dividends, but my NAV went down 20%. So what did I really get? Well, I got 90% minus 20%. So I had a 70% gain holding that particular YieldMax ETF income fund. So I have a free spreadsheet if anybody wants it. A lot of people have asked for it and I've handed it out. It's on my channel page. And if you don't see it there, just send me a message. My email is there. But normally it's underneath one or two of the videos. I have a total return video, and down there in the description, you just request it and it sends me an email and I release it. So anyway, I don't want to go on and on about this. I'll jump in my analysis, but I like to inform and educate. And when I have an opportunity, I do that. And you can just fast forward this if you want and get to what you want to see. All right, so no shares were bought. So nobody's buying into the fund. This is the most unloved and hated sector in Wall Street. And I love it because I've ridden this cycle, right? I rode the 2000 decade gold and silver cycle and made 8 times my money and retired early doing it. So I'm very familiar with it and have performed in it. And I've also seen, you know, wild rides on the NASDAQ. So it's not like I'm only in that. I own all kinds of the other funds. You know, I own Tesla, I own YBIT, the BTCs, the Conies, the Misties, the GDXY, AMZ. So I'm moving into several of the funds and choosing the ones that I like. Okay, so let's move through and see how the weekly and the holding. So here's the weekly. These are the close prices. Both, well, we were actually flat technically. This arrow should be sideways, right? But GDX was down 4 cents. So here's our existing calls. So what do we have there? Well, we have 1.8% out of the money, right? We're not at 54. We're at 33.89. But we really, and reminder this week, guys, we only have 3 more trading days, Tuesday, Wednesday, and Friday. So make a note of that if you don't. I mean, I know most people know about the upcoming holiday. So we'll go and talk about holdings now. So in the holdings, you see the share count, you see the net assets, and this is what we've collected, right? So here's our current, and I put it over here, but it's captioned down here in smaller. So we've written calls that I talked about here being 1.8, and in here we have 63,000 that we collected in the piggy bank, and we've captured. In other words, we could buy it all back for 35, so we're over halfway of having collected all the money. So what is next in holdings is I typically look at their current synthetic. Although we're not writing anything new, it expires 2 weeks from this Friday, and we're 712,000 paper loss. And here's our current, so you can see how we're doing. Here's the 63,000. And sorry, we could buy it back for 27. I did not, I'm not sure. Oh, I know what it is. We've captured 35. So when you, the captured and what we'd have to buy it back for, those two numbers equal. That's why it's 56%, and the 35 is the bigger number. All right, so this is what it looks like, right? So 4 days, the last 4 days, we've been 626, 715, 712 on our numbers. What did we close at? We closed at 1889 for the second day flat. Fair value is 1891. Well, let's get over to what you guys want to see. Again, if you saw my payout prediction, nothing changed because they put on no new trades, right? They didn't trade anything, therefore they didn't generate any revenue. So just a reminder, I took the 2 months because they had 2+ weeks in here and a full month of June. So this will be the first payout. and I added it up and divided it by half. I said, okay. And it's really 93.5 if you want to know, but the rounding is making it 94. But YieldMax loves those 3 and 4 digits payouts. They crack me up. So we shall see. The number stayed the same here, so I'm talking about a yield under 60%. Now, YieldMax could look at this. It's a brand new fund. It's only 325,000 shares. They know it's a forthcoming. They know where commodities are going, and you know they try not to be market savvy and just be option savvy and work within what their prospectus and the SEC guidelines and rules on what they told them they were going to do. But the reality is they want this fund to be successful. They put it out to have some variety and to be competitive. So if they want that to happen, I think they're going to pay a 90 or $1. If they want this to be a 30% yielder, then they're going to get very few people, right? To bring it down to a 36 yield, they'd have to pay, 55 cents or something. So let's hope that they don't go pay that, but they could. Okay, just giving you a heads up on these new funds. It's more difficult than on a track record fund. When you've seen 6, 8, 9 payments, even 5 payments, 3 payments sometimes. Okay, guys, that's what I got. I'm not going to keep you. So again, this is not financial advice. I'm not a financial advisor. Have a great day ahead. See ya. Bye.